Quiz 3, Question 7. A company is considering buying a new machine for one of its factories. The cost of the machine is $60,000. Its expected lifespan is 5 years. The machine will save the cost of a worker estimated at $22,500 annually. The net book value of the machine at the end of the 5 years is $10,000. However, the company estimates that the market value will only be $5,000. The company uses straight line depreciation over the 5-year life of the machine. What is the NPV of purchasing the machine if the discount rate is 12% and the tax rate is 30%? So far, we've calculated for the savings, backed out depreciation, and we calculated essentially the NOPAT. What we then want to account for as well, we have the machine cost. And so our machine cost is $60,000. But then we need to add back in depreciation since we're going to look essentially at the cash flow of the firm. All right, to get to the NPV, we want to know the cash flow. So here, what we would actually do then is subtract the negative depreciation. So it adds it back in. And then we want to hit F4 just so it locks it in going down. And how that would look over here is plus depreciation. We're adding our depreciation back. So then what we're left with is our free cash flow. We don't like this because technically we don't have a times 0 here. So this would be equal to 60,000 at times 0. And then we would have our cash flow per period. But what we also need to account for is at the end of year 5, we're going to sell our equipment for $5,000, and we also get a tax loss or a tax reduction of $1,500. So we need to add that into year 5. So our last requirement is to calculate an NPV. And so we can just use our NPV function. We were given a rate of 12% as the discount. The discount rate is 12%. So we're going to do an NPV, 0.12 for our discount rate. We will then get our values from years 1 through 5, and then we're going to add back in our times 0 value. And so you can see that our NPV is $11,277.83. We can do the same here by just calculating the same NPV. See, with the discount rate of 12%, the machine generates a positive NPV of $11,277.83. So we should definitely buy the machine.